The Federal Reserve met today, and I want to talk about TLT ETF, and I want to bring in an inverse ETF trading strategy using TBT ETF. So, what's going on? First, the Federal Reserve. Not exactly confident that they're going to hit that 2% target rate. They may sit there for some time with their current level on interest rates. My recommendation, they shrink their balance sheet rapidly. That would fix a lot of issues. In the meantime, how does this affect the Treasury bonds as well? What's my strategy for TLT ETF moving forward? I know a lot of you guys follow me on that one. Again, I believe TLT ETF is going to continue to move higher. We probably did see a lot of the bottom in this sort of area right here from what we've recent movements. TLT ETF I think dropped all the way down to about 85. From here, front running economic data points. I think they're going to be frothy. I think that's going to freak out the markets considerably. And this is when I use this inverse ETF trading strategy where I'll bring in TBT ETF. What I'll probably be doing is buying TBT ETF with the expectation front running these economic data points like non-farm payrolls coming out, next week? This one's probably going to be hot, and the stock market, like it sold off before, is likely to sell off. Bond yields will spike up. TLT ETF will fall down, which means TBT ETF, the inverse ETF trading strategy, shoots up. I take my profits. I make money in this stock market. This is going to be a very kinetic year. Lots of energy, lots of things moving higher and then right back down. The bull market that we've seen, done. Let's jump in. I'll break everything down. I'll show you my strategy for TLT ETF and I'll break down the inverse ETF trading strategy I'm going to be using with TBT ETF. Let's jump in. For those of you just joining me for the very first time, first and foremost, I am an economist. And I break everything down starting with the economy. And I've been saying since, October of 2023, that the Federal Reserve should not be lowering interest rates all through 2024. Two reasons. Number one, the economy is too strong. If they lowered interest rates in this kind of environment, they would stoke inflation. They did lower interest rates. The second reason I kind of pointed out was this is an election year going into 2024. They would not want to look like they're tipping their hands one way or another. They did it anyway. I thought that was a horrible move. We're seeing results that show that more likely than not, the Federal Reserve is done lowering interest rates at this point. 2024, 2025, I do not see the Federal Reserve moving lower. They have two choices what they could do. Pivot and send interest rates back upward should it get to that point. That's a possibility. And it's something that I think is also a probability. I've seen a lot of analysts from the bigger banks sitting there saying, listen, we think they pivot and send interest rates right back up. The other thing they can do is shrink their balance sheet significantly, rapidly. The money supply is moving higher and higher at a very rapid pace. Basically, this is showing that we're seeing growth rates in the economy that will not keep price pressures maintained. They're not even at their 2% target level. We'll probably see price points moving higher. So going into any kind of economic data point, I'm going to be front running those with the TBT ETF using an inverse ETF trading strategy. Here we're looking at the US 10-year Treasury yield. I don't see the 10-year going above 5%. And I've said this over the past several months, that I think the very peak of this is in. Now here's something that's very interesting. Yield is one thing. The price of the yield is the other thing. And this is such a key function when you're looking at your TLT ETF trades. TLT ETF moved significantly lower, more so than bond yields moving higher. And it's all about price. There's no relationship. It's not a one-for-one relationship that if bond yields are at one specific price, they will always be at one specific yield. It's a matter of what you're willing to pay for at any one point for any one particular yield. You could be sitting on yields that are very low and thinking that yields are going to go even lower, so you may not want to pay a particular price for that. But what if those yields were going to go higher? You definitely wouldn't want to pay too much for those yields. So it's something that you got to kind of conceptualize, that price and yield are not a one-for-one relationship, but they are an inverse relationship. So it'd be 1 versus -1. So that's why the 10-year, I don't see it hitting 5%. I don't. I don't think we're in any kind of trouble. But we do have some kinetic opportunities, Washington, D.C. Are we going to see across the board tariffs? That is such a huge gamble. I think he's going to threaten and then make a phone call and then a negotiation tactic. And he's going to think of himself as being a genius. It's disruptive. It will create kinetic opportunities. And this year, I definitely want to make money in the stock market. So here's your 10-year Treasury yield. I think we bounce around a lot. I don't necessarily think that we see a big directional move this year, but I do believe that eventually the Federal Reserve will get their price pressures where they need them to. They may need to, at most, bump the short rate maybe another 50. Not all at once. They may go about 3 or 4 months and say, we're going to kick things up just a little bit. Then not get the results we're looking for, then kick up the the overnight rate another 25 basis points, then probably sit there on their hands for a minute. We'll see how that plays out, data dependent. Every single data point going forward, I'm front running that. Let's take a look at, this is TLT ETF. And not a whole lot of activity out of this particular one with regard to what happened from the Federal Reserve's meeting. If we take a bigger look, moving back several years, you can see that we're much lower in TLT ETF versus where it was previously. I thought we would clear 100. I think I really started buying in March, April, May of 24. Targeting 100, 110, all the way up to potentially 125. But at the same time, I was fighting with myself saying, you know what? Boy, this economy is really strong. I don't know that the Fed's going to be lowering interest rates as much as that. So I was right up to a certain point, but I was dead wrong, and I wasn't confident enough to sit there and say, man, I should just take this money right at 100 because this economy is too strong. So the TLT ETF has been trending lower, stuck in this lower range. It may be a long time before we see these moves above 100 again. And so what I'm doing is I'm basically sitting on it, because every time we get a solid job data point, what's going to happen in the stock market? The stock market is going to rattle like Monday deep sea kind of rattle. You'll see some selling. Institutional investors are going to yank their money out and rush into the treasury markets. By buying up those treasuries, they will push price up, yield comes back down. So I feel as if there's a pretty solid bottom in TLT, whereas I feel there's a pretty solid top in the stock market. And I think buying into this bull market at this point, you're buying into the very tail end of it, and you're likely to see losses. Whereas the downside risk on TLT ETF, I think, is quite limited. That as money pulls out of the stock market and rushes into treasuries, this will maintain a floor. But you're going to get a lot of that kinetic opportunity when the economic data points come out. Might not be huge, but we've got CPI. Actually, this week, Friday, we get PCE. That's probably going to be a big fat yawn. We already know that it's going to bump up slightly. So that market probably isn't going to do a whole lot. I'll probably play some volatility ETFs using an inverse ETF strategy on that one. Expectation is volatility falls. Therefore, using the inverse ETF trading strategy that I've been looking at and using, I'll be buying into that volatility with the expectation that that SVOL ETF is the one I've been playing with will head higher on Friday because we're not going to see any volatility. I think PCE is going to be a pretty flat number. Here is TBT ETF, and this is my inverse ETF trading strategy. When I see TLT moving down, TBT ETF will spike higher. So going into certain economic data points, releases such as non-farm payrolls, that's going to be a strong one again. Very likely TBT ETF will see a pretty decent size spike upward. What happens is interest rates will spike up. TLT ETF, which is the inverse to interest rates because it deals with price only, falls. TBT ETF spikes up. This is an inverse ETF trading strategy. Most people get involved going in on the long end on the underlying. And in this case, TLT ETF is a pretty solid underlying. But these inverses are, for me, what I'm going to be using as a mechanism to make that money in front of these. I'm going to pull that money out, and then I'm going to go ahead and basically buy more TLT ETF. That anytime there's an economic data point comes out, we see a spike higher in any kind of activity, bond yields shoot up, TLT falls, this TBT will spike up. I'll take those profits and I'll buy that dip on TLT. I'm just going to process it. Because what happens then is, more likely than not, we see a maintain stance from the Federal Reserve. But all these jobs that are being printed is going to create a great deal more price pressures. So we're going to be data dependent for some time, like pretty much a solid 6, 9, 12 months. Here's a better look at TBT ETF long end. And if you recall from the other chart, TLT ETF was all the way down on the bottom side. So my strategy is still looking at the long term. I think the stock market is going to sell off. So the last thing I'm going to do is be adding more money into the stock market at this point. I don't know that we're going to see necessarily a recession, but I do believe that the Federal Reserve needs to restrict economic growth. And because of that, we'll see slower job growth. Because of that, we will see slower revenue growth for companies. Because of that, prices, which have been pushed pretty high. I mean, some of these stocks are, their yield, their forward earnings versus price today, a little too high. So basically what I'm looking for is forward earnings on the overall broader market. I mean, we're pretty solid at 30. If we could see 25, 22 and a half, then that would be my signal to start buying stocks again. Should the Federal Reserve land this with their soft landing that they have been hoping for some period of time. I think that this plays out over a considerable amount of time, but it's data dependent. And that's such a huge thing when you're looking at this that, yeah, we're looking at some data right now, and this is probably going to rattle the cage of the stock market. Bond yields probably not going to, 10 years probably not going to push up to the 5% level, which means TLT's floor is probably going to be there. But you'll see spikes with TBT ETF, the inverse ETF trading strategy, shooting up I'll take those profits. TLT ETF had fallen at that point, and I'll buy that dip. Long term, I'm still targeting over 100, 110, 115. Maybe I've seen some comments. Some guys were saying I'm holding for 125. I think that's a long shot. I'm not saying it's an impossibility. We'll see. The two asterisks to that are, what do the tax cuts look like? Argentina did a very similar thing down there with their economy. They did tax cuts to the wealthy. They're in a recession. Their debt skyrocketed. That would be bad. Let's see what the government puts together for tax cuts and how that plays out. Second thing, tariffs, which I think the economy could swallow, but it would slow economic growth. And then the Federal Reserve would be off the hook. Those tariffs would actually help my positions out quite nicely, actually. Make sure to hit the like and follow button. I'm doing a whole series on inverse ETF trading strategies simply because this year is going to be nothing like last year. We've had a pretty solid bull run for 2 solid years. Technically we started in 2020 with the dip on COVID. 22, 23, things got a little interesting when price pressures kind of showed up. Those price pressures mostly went away, but the Federal Reserve isn't quite there. They'll at least have to keep their interest rates where they are, might have to bump them up a little bit. In the meantime, what happens with Washington, D.C.? Tariffs, are we actually going to see that? Probably not. It might just be threats and phone calls. But the tax cuts could be really ugly. Make sure to hit that like and follow button. I'll continue with TLT ETF. I'm going to be buying everything I possibly can at these lower levels. Inverse ETF trading strategies, if you were looking for those, I've got several that I'm pushing out regularly for those who've been following me. We'll see you in the next video.